Hi guys, welcome to Tax Q&A. Today I'll be answering a few questions on something that's really been buzzing these days. Which is initial public offering. Yes, IPOs. So here we have a list of questions with us. Let's get started with the first question. What is an IPO? Of course, this had to be the first question. Okay, so IPO stands for Initial Public Offering. Picture this. Let us say a company is killing it and they're thinking, hey, let's expand. Let's set up a new plant or let's set up a new product line. So instead of hitting up the bank for cash, they turn towards the public. People like you and I. So what is in it for us? Well, we get a slice of the pie. That is the share in the company that we invest. Think about it, like our favorite brands, Swiggy, Ola, Haldirams, if they go for an IPO, we can invest in them, ride the growth wave, and of course, they get a nice chunk of money to fuel their future plans. And this very process, when a private company opens its shares up for the public for the first time, is called initial public offering. Okay, on to the next question. What can I improve? How can I improve my chances of getting an IPO allotment? I can totally understand where you're coming from. And it's a common concern. And here's the thing. IPO allotment is like a lottery. And like any game of luck, we tend to find ways to improve our chances of winning. So first off, apply at the cutoff price. Next, applying from multiple Demat accounts can also help. Use Demat accounts of your family members or close friends to apply and improve your chances of scoring an IPO. One more way is applying from the shareholder quota. Take the recent IPO of Tata Technologies, for example. If you had owned even a single share of its parent company, Tata Motors, you're in the shareholder quota game. This quota usually has lower competition, increases your chances of snagging an allotment, and then of course, cross your fingers and hope for the best. It's all part of the IPO adventure. Okay, the next question is, do I have to pay taxes on an IPO allotment? Okay, first of all, congratulations if you got the allotment. And the answer is no, you don't need to pay taxes on IPO allotment. I mean, think about it. When you buy a lottery ticket, do you pay any taxes? Of course not. But when you hit the jackpot, that is when you pay taxes. And now there can be two cases here. Either you sell the shares on the listing day, or you play the long-term game, thinking that the share prices will go up in the future. If you go for the quick flip on the listing day, the profit falls into the short-term capital gains category because your holding period is less than 12 months and tax a 15% slice. And if you decide to hold the shares and sell them after 12 months, the gains will be classified as long-term capital gains and those will be taxed at 10%. Okay, on to the next question. What is IPO GMP? Oh yes, the grey market. It's like an unofficial marketplace where investors trade for an IPO share before it's even listed on the stock exchanges. Now, talking about the grey market premium or the GMP, it is the difference between the price at which the IPO shares are traded in the grey market and the IPO issue price. Picture this. A business drops an IPO for 100 rupees and the grey market premium is 20 rupees. So you can expect the IPO to list at roughly 120 rupees on the first day of trading. Investors use GMP like a crystal ball of sorts. They guess the listing price and predict the potential profits through it. But of course, GMP is just an estimation and the actual listing price can always vary. Okay, so the next question is, what if I sell IPO shares at a loss? Oh, this question reminds me of Paytm and LIC IPOs. Man, those were tough pills to swallow. I mean, think about this. IPO shares at a loss, this is probably the worst thing that could happen to anyone. But yeah, back to your question. Like any other shares, if you sell the shares you receive in an IPO at a loss, you will have capital losses. But you can also use these losses to reduce your tax outgo. If these losses are short term, they can be adjusted against short term and long term capital gains. But if these losses are long term, then they can be set off against only long term capital gains. And you can even carry forward them by filing an ITR on time. And these can be adjusted against the future gains. Okay, so we are done, right? Oh no, we have one more question left. Okay. Should I invest in IPOs? Okay, this is a good one to end the episode with. See, whether you should invest in an IPO or not boils down to what you're aiming for. If you are in for some quick listing gains, see if the IPO is getting highly oversubscribed, grey market premium is good, and if yes, sure, the IPOs can be your playground. Now, if you are more of a long-term player, do your homework. Maybe chat with an expert, and if the company's got the goods, why not? And okay, I guess that's a wrap. Yeah, so that concludes the first edition of Tax Q&A. If Google search is too much work for you, Quora is full of opinions, then you should check out Tax Q&A, where you can toss questions and our tax experts will give you quality answers and share their knowledge. You can also share your experiences and connect with like-minded people on Tax Q&A. So check out the link in the description. If you have suggestions for us or topics you'd like us to cover, let us know in the comments. We are all yours. And hey, don't forget to like and subscribe so you don't miss out on any of our upcoming videos. Until next time, catch you in the next one. I'm so sorry, guys. Wow, congratulations. Wow. So much pressure, guys. Let's go. Why not? Oh man. Oh. Hey. Those were tough pill to swallow. That's that. Come on.